Hi traders, in today's video I'm going to show you a live example of me taking a losing trade in the market and how to handle the emotion after a loss. Hi traders, currently I'm looking at EU. Today is the 20th of October and currently I'm in a trade and I'm going to explain to you why I took this trade. On the higher time frame on the 4H, we can see that we have a dealing range and the price has retraced to a premium level above our 50% and the price has retraced back to the bearish order block. Price also tapped into our fair value gaps here and here. Following yesterday momentum, we can clearly see that it's bearish momentum and we have a market structure shift. Going down to the lower time frame on the 15 minutes, we can see that our buy side liquidity has been taken. Our buy side liquidity has been taken right over here on the 15 minutes time frame. We also have a market structure shift on the 15 minutes time frame. Let's go down to the 5 minutes. On the 5 minute time frame, we can clearly see that we have our 3 drive patterns. We have the 3 drive patterns right over here, here and here. Price took out the buy side liquidity and we have a impulsive displacement followed by a market structure shift. We have a very nice fair value gap right over here and price retraced back up to our 50% into our premium area. That's why I took the trade right over here. The fair value gap add confluence to my setup. As we go down to the lower time frame on the 4 minute, we can also see another bearish fair value gap which add confluence to my trade setup. This go the same for the 3 minutes, 2 minutes and 1 minute. On the 1 minute, we have this daily range and the price has retraced back to our 50%. The price has traded up to our premium level above the 50%. That's why I took the trade right over here. It is nice to see that the candle bodies are respecting the midpoint of the bearish order block. As you can see, the spread has took out the trade and it was a stop loss. This is a good loss because I follow my trading plan. I executed according to my setup requirement. I look for my liquidity grab, I look for my displacement, I look for my market structure shift and my fair value gap, and also I enter at a premium. This is a good loss for me, and moving on to the next one. As you can see, I apply my ICT trading model. It didn't work out. It's perfectly normal to feel the pain of losing money. You might even starting to have doubts on the strategy. Does that mean the strategy is bad? No, not at all. It's impossible to make money in the financial market without taking a loss. Every trader knows that losses are part of the game. No one likes the feelings and emotion that come after a losing trade. It's painful and disappointing. If the price immediately rallies higher or lower after you stop out, you're kicking yourself. Perhaps you knew the trading setup was failing but wish that it will still play out even after the price action has failed to deliver according to your plan. Sound familiar? It should, because that's how the Mr. Market wants you to react. Don't fall for it. It can be destructive if you don't learn how to handle losing trades and these emotions. Some traders, including myself, try to revenge trade to recover the losses. This ends up a big loss or blowing a trading account. Losses are part of trading. Trading is a business and every business has expenses that must be taken out of the revenue to derive a profit. One way that helps with handling losses is to own the responsibility 100%. There is always a reason for a losing trade, but as a traders or investors, we must accept the risk. Blaming or finding any excuse won't help at all. At some point, all traders will take a losing trade, and it is important to consider losses as a business expense. Naturally, you want to minimize those expenses to grow larger profits, but expenses are unavoidable in any business. That's why we must cut our losses as quick and as minimum as possible. The best trader learn from losses, and that experience will make you a wiser trader for the next time when you are in a similar situation. This is how losses become learning opportunities to improve your skill set moving forward. Not all losses are equal. There are good losses and bad losses. The distinction is independent from the amount of loss, but the circumstances or the situation of it. Good losses are those that are taken in a timely manner as planned according to your trading plan. In other words, you already anticipated what can go right and what can go wrong with the trade and took a loss as the trade wasn't playing out according to the plan. This is a good loss because you were prepared for it and reacted according to the plan. Bad losses are those that are taken out of fear, panic, as you stray from your trading plan or didn't even have one to begin with. This may be as a result of impulse trading driven by fear of missing out, FOMO. Jumping impulsively into a trade and weathering initial pullbacks until the pain was too much and stopping out in panic. Sound familiar? This happens to everyone at some point. I was one of them. Everyone has bad losses. The key is to recognize and learn from them. After a losing trade or big loss, there's no way to trade with a clear head. Trading based on emotion and luck is not trading. It's gambling. Most importantly, give yourself closure from the trading platform. Physically get up and take a break. Close your laptop, go outside and get some fresh air. Don't feel the urge to jump right back into the action. This is how you can go into tilt mode. You need separation from the screen to calm down and catch your equilibrium. Remember that everyone takes losses and it isn't the end of the world. Come back fresh and it's time to review the trade, whether it's a good loss or a bad loss. Diagnose where you should have taken the stop loss and what caused you to stray from the plan. Was it greed? Was it fear? Was it FOMO? What price action or key technical factors did you overlook or ignore? At this point, you have to be brutally honest. Bad losses are dangerous. It promotes bad habit and breaking your trading plan. There's also a saying, you rather follow your trading plan and take a loss than winning a trade for breaking your rules. Meanwhile, good losses build up your discipline to follow your trading rules and plans. Self-awareness is very important in trading. That's why you want to take note or document your feelings or emotion when trading. Did you feel stressed and anxious taking the trade as soon as you enter? If so, this may be a position size issue as you are risking too big of a position and chasing prices. Personally, I will write down how I was feeling before, during and after the trade. This shifts your focus from revenge trading for recovering your losses to trading process. It's time to put a lesson to work slowly. There are more than 240 trading days in a year, so there's no rush to get back in there. Reduce your risk by half or even demo trade to test the refinements. Every little win is a victory on the way back. Always have a stop loss set in stone for the new trade and a max loss for the day. If you trigger them, go right back to reassessing your behaviors and actions. Remember that dealing with trading losses is always a work in progress and part of the trading business. The key is to keep them manageable. Lastly, embrace the process of trading. It is a continuous process and let go of the outcome. Follow the trading plan with discipline and the money will take care of itself. The more detached you are from the emotion of losing a trade or even winning a trade, the better you are as a trader. According to ICT, if it is boring to win or to lose, you're on the right track. Just like in real life, you make mistakes and you learn much more from them. I'm a new student to ICT concepts and I'll continue to share my trading progress in this channel. Follow the journey. I've added new screenshots for episode from 21 to 30 for ICT 2022 mentorships. Check out my screenshot and notes in the description. It's completely free. I'm a strong believer of taking actions. Hopefully you can take away some actionable points from this video. Until next time.